Okay, welcome everyone. We'll start our lesson one. Today lesson will go through LO1 learning outcome one, which is about demonstrate and understanding of management accounting system. My name is Anjum Satar and my email address anjum@ukversity.co.uk. Please, if you have any question, drop me email on my email address. So let's discuss, what we know about management accounts. Anyone know the difference between management account and financial accounts? Yes, what we know about management accounts and financial accounts. Okay. So management accounts. Hello, welcome. Good afternoon. You okay? Hello, good afternoon. Can you hear me? Okay, welcome everyone. We'll start. Today lesson will go through LO1 learning outcome 1, which is about demonstrate and understanding of management accounting system. My name is Anjum Satar and my email address anjum@ukversity.co.uk. Please, if you have any question, drop me email. So before starting our unit, first we'll discuss, what is the aim of this unit. The overall aim of this unit is to introduce the fundamental of management accounting, which apply to the wider business environment and the organization which operate within the environment. Student will explore how management accounting use the financial data to aid the planning, decision, and the monitoring control of finance within organization. On successful completion of this unit, student will be in a position to present financial statement in workplace context and be able to assist, the senior colleague with the financial business planning. So that's all we'll go through today lesson. Anybody any question, please, before start? Okay, each lesson will go through one learning outcome, and today lesson will learning outcome one, indicative content. So introduction to management accounting. Management accounting is mean internal accounting. Management is mean the making the decision and choosing the various alternative and finding the best alternative that suits us according to the environment. Define the management accounting. Management is accounting all about planning, controlling, organizing, and implementation and making the decision. So what is the management accounting system? So where we do the cost recording, budgeting, and decision making, managing cash and various budgets. That we'll go through. Explore the original role and the principle of accounting, which we'll go through, and distinctions between the management and the financial accounting, different types of accounting systems, cost accounting. So all these we'll discuss in this lesson. So what is the management? Management is the element of management accounting is the element of management. So management is a process of designing an environment to achieve the pre-selected objective. Pre-selected objective is the management. So we need to make sure we achieve our objective. Okay, guys, let's read this slide, please. Let's read this slide. We'll go through. Okay, guys, so management accounting is a key element of management, which is in particularly it involves identification, generation, presentation, interpretation of relevant information to help managers to run the organization. That's the key message in this slide. Okay, next we're looking what is the difference between management. So management accounting is the internal and financial accounting is external. So final accounts, those we prepare in accounts for external user, for external stakeholder to make the right decision, that is the financial accounts. And the management account is the internal, which we can generate the management report to look around, the budget variance. So that's management. So then management accounting information mainly produce purpose of information is internal use. So key difference between management internal user External user, add planning, record financial performance, no set of format. There is a no duration in management accounts, but financial accounts once a year we have to produce the reports. Next, we're looking the management accounts and financial accounting. The data used to prepare the management accounts and the financial accounts are the same. The different accounts arise because the data is analyzed in different ways. So management accounts, we can internal purposes, decision making, financial accounting 1 year has made the requirements. All is a financial account. Anybody? Yes or no, guys? Anyone? Accounting consists of two: recording, summarizing, and financial statements. So like income statement and statement of financial position, statement of cash flow, statement of change in equity. These we account. So accounting, we use different techniques and methods in management accounting. As a cost accounting system, inventory management system, job costing system, price optimization system. So these are all you use. The good instrument is a live blood. If you have a right information, you can make right decision. We have a data. If we have a data, it become information. When you have information, it's become knowledge. When you have a knowledge, you can make knowledge-based decision, and you're selecting the best course of action, and you can minimize the cost and you can increase the profit. So information need to be accurate, need to be complete, need to be cost-effective, understandable, relevant, accessible, timely, and easy to use. If information is not easy to use, it's no point you pay the money to the data mining company. Get the information. So that's we need to. So my like I say, we are in the business to be develop the nations and generation equipping the new innovative skills. So the 4 key element of the missions can be purpose, the strategy, action plan, policies and cultures, and the value of company. Value, like people like to be treated like Tesco values. Okay. So planning, decision making, and control. Planning is set the objective, identify the way in objective can be achieved. Decision making and control, how we can control is a corrective measure, such as if we have a variance there, so how we can try to be minimize the variance. Data can be collected by the two source, like the primary source. Okay, so anybody any question, guys? So data can be primary data and the secondary data. Primary data is mean first-hand information. Secondary data which is available on internet. Okay, then internal user sources of information, which is accounting system, payroll, and external government, other business website, financial and press. These we can use. So costing method, different costing method we can use, such as absorption costing. Marginal costing. Absorption costing is also known as a full cost, where fixed and variable cost we can absorb into the product. That's called the absorption costing. Second costing method is called marginal costing. Marginal costing is mean the variable cost, all the variable costs such as the material, labor, and that's we need to be look around. So we're looking the value in the unit, total production, marginal cost, production cost, valuing of inventory, and the fixed production overhead. Overhead means that's the cost which not directly involved. Here is example about if we are using the absorption costing, we'll do the full cost where fixed and variable cost can be absorbed. Under the absorption costing, closing inventory value can be higher. So we looking here the variable cost of production, fixed cost, and then we have a minus, we have a gross profit, and then we can minus overheads, and we get the profit. And this is absorption costing example, and you will see the sales variable cost will get the contribution per unit, and then we can fixed cost will be treated as a periodic cost. Okay, then we look the cost and object unit, and the cost of unit cost center. Cost of unit is mean the unit of production which we are going to produce, what is costing us. So that's the cost unit. The cost center is to whom we can charge the cost. Which we use, direct material, direct labor, and that is the cost which is traceable in the product. If we add them all, it's called the prime cost, and then we minus all the variable. We add the variable production overhead. We can say the total variable or the total marginal cost, and then we have a fixed. Then we can say the total production cost, or we call absorption cost, and non-production costs like admin, selling, and which we can outsource to be reduced it like a company does. We can calculate the cost, production department, admin, financing, and these costs known as the cost by function. Cost and indirect costs, that is material direct labor, indirect, which we need to protect, which is labor cost. Activity level, like if you're using less space, you be at less cost. Okay, fixed or variable. The cost by behavior can be semi-variable, like the salary is a fixed cost and wages is a variable cost. The material can be variable cost, because if you produce more unit, you have to pay more, and that's if you pay hourly rate or the piece rate of product, according to one of the great scholars, Frederick Walker Taylor, he gave the concept of the piece rate. The people are more motivated to piece rate, but the problem is how to maintain the quality. So quality maintenance and the quality assurance is very important. So variable cost, the cost which change with the level of activity. Fixed cost which stays the same. Semi-variable, like phone line rental is a fixed, and the call charges is a variable, so we call semi. Or step cost, fixed cost can stay fixed up to the capacity level. Okay, then looking like you see here, these graphs is a fixed cost, this is the step cost, and other is the cost behavior is, we can say total cost. Total cost is mean the fixed and variable together is equal to the total cost. Okay, so next we're looking if we have a fixed and variable cost, we call semi-variable, and we can use a high-low method where we can look around high number of units. Like in this example, 10,000 and 2,000, there is a difference between 8,000, and the cost difference of high unit and low unit total cost is 2,400. So 2,400 divided by 8,000, so 0.3, that will be per unit variable cost. So unit times by per unit variable cost. So the fixed cost mean either the low or high level of activity, the fixed cost will stay the same. The cost behavior can be production. We'll go to Okay guys, we'll look now types of inventories. Inventory have three types. If you open your fridge, we can find three types of inventory: raw material, work in progress, and finished goods. So like meat is a raw material. If you boil it half, this is work in progress, and if is ready to eat, that's the finished goods. Okay, guys, the next we'll looking at use it, to allocate the okay. Inventory drink to be inventory needs just weeks the invest time. Okay, guys, let's see. We'll next we discuss types and values and facial value theory. Okay, next we looking in pre-evaluation.